Hello, and welcome to this edition of The Market Share. I'm Paul Gifford, Chief Investment Officer at First Source Bank. And joining me, as usual, is Rob Romano, our Director of Research. Rob, the last couple written pieces and videos of Market Share have been around the government, either national or local. I thought we could expand a little bit more. I know you want to talk about the government and maybe even the CHIPS Act targeting a specific industry.
Sure. Yeah, thanks, Paul. Yeah, we have serious concerns about the excessive government spending in Washington. The deficit the past year was $1.7 trillion. This year is going to be roughly in a similar amount. But with that said, we do believe there is some legislation out there that will pay dividends into the future. And as Paul said, it's the CHIPS Act. So the CHIPS Act is a $39 billion bipartisan piece of legislation to promote semiconductor manufacturing here in the States. It's comprised of grants, loans, and also tax breaks. So currently, here in the U.S., we manufacture only 12% of the world's semiconductors. Most of the semiconductors are manufactured in Asia by a company called Taiwan Semiconductor. And that is, even though the U.S. is the clear leader, and I mean the clear leader in the design, development, and research of semiconductors. So we have companies here in the States, like a Broadcom, NVIDIA, who are fabless semiconductor companies. So they do all that design and research work, but they elect to outsource the high-cost manufacturing of those chips. So building a fab and installing it with expensive equipment can cost several $billion. And on this graph here, you can see some of the beneficiaries of the CHIPS Act. Intel, they're building a large campus in Ohio. They'll have several facilities there. Investment is upwards of up to $100 billion. Samsung, they're building out their campus down in Texas. And then we have Taiwan Semi adding a very large fab down in Arizona. So yes, Paul, this is a big deal, and it's going to pay benefits well into the future.
Well, it's good at least some of that government spending ends up in a place that can help us as a country in whole. Obviously, we know we've talked about the government and the largeness of that, but we know that day to day, it's really small business that drives a lot of the success in the United States in particular. We're very unique as a country like that. Why don't you talk about the situation with small businesses and some of the challenges they face?
Yeah, you're exactly correct, Paul. You know, small business is so important to the health of the U.S. economy, and it's even more important to the health of the communities in which we serve and operate here at First Source. You know, just to talk about these large companies for a minute, you know, Microsoft, Amazon, Apple, they get so much attention when you turn on CNBC and the TV. And again, these are great companies. They generate great cash flow, have great balance sheets, and they really dominate the industries in which they operate in. The market cap of Microsoft is $3.2 trillion. That is larger than the GDP of many countries, and it's larger than the market cap of the Russell 2000 Small Cap Index, which is closer to $2.6 trillion. So how do we measure the health of small business? One of the ways is through the National Federation of Independent Business and the surveys which they have. One of them measures the health of small business through an index. That index is currently at levels of 2013, so very depressed. And it spent 28 consecutive months below the 50-year average of 98. So again, some of the concerns of small business: rising cost, inflation, attracting and retaining good talent. A close second, though, is access to credit. The prime rate right now is 8.5%. And in one of the surveys, the average loan for small business is 9.3% right now. So, and we can contrast this with large companies that tend to borrow at fixed rates, like Johnson & Johnson. They just did a bond offering for an acquisition, and that was close to 5.2% for a 30-year piece of that bond. So again, this is important because most individuals work for medium and small businesses. Only 18% of employment is with these large cap type companies, Paul.
So it is the driver and employs a huge chunk of the population, and that is a disadvantage when you're financing at 9 versus 5 something for a small company. Now, Rob, you've been here so many times. I can't let you get out of here without a conversation about first quarter earnings. So Go for it.
Yes, love to talk about earnings, and not a surprise, earnings came in better than expected. I think what the surprise was is how well margins did. Margins continue to hold near record levels. If there was any weakness in earnings, it had to deal with the forward guidance, and mostly around consumer-led companies like a McDonald's, Starbucks, Target, Home Depot, or Lowe's. And really the theme around all those was pretty similar. It was less foot traffic and people trading down to lower priced items. So, but when we look at the full year, earnings are expected to be about 10 to 12%. That's lofty, but attainable. And as we look out to the second half of the year, analysts are expecting that we'll see more participation from companies outside of technologies growing their earnings. Markets have been fantastic. We're up about 30% from the lows in October. On this graph here, I'm showing valuations and a few different metrics. Price to earnings on a forward basis, on a trailing basis, price to cash flow. And really what you can see here is that regardless of the metric, we're in roughly the 90th percentile when it comes to valuations. So markets are not cheap by any means, and sentiment appears to be a bit optimistic.
Well, that's why we're up 30%. Clearly, there's been an optimistic outlook for the economy and earnings over the last 6 or 8 months. Rob, as always, thank you for your comments on the CHIPS Act, small businesses, and then obviously corporate earnings. If you like today's content, I encourage you to share that with your friends and family. If you do not regularly receive the market share, I encourage you to subscribe using the QR code at the end of the video. And as always, thank you for the opportunity to serve you and your family, and have a great day.